You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody, that rockin' bit of tunage means it is time to rock out once again with your favorite bi-weekly source for all things options related. Yes, it's the Option Block. My name is Mark Longo. I will serve as your host, your guide for this journey through the world of options. Of course, you can get us live every Monday and Thursday, noon Central, 1 p.m. Eastern, or after the fact, wherever the heck you listen to find our podcast programs. We should be on all of them. If there's some esoteric store you like to use that somehow we're not on, then let us know. Of course, you can always grab our mobile app as well. However you listen, live after the fact, keep those questions coming. We do indeed love to hear from you. Get more of you on the show today. It is Thursday mail block time, so if you haven't sent those in yet, and you're listening live, get them in quickly. Otherwise, after the fact, you missed it, but get them in next week. We'll talk to you next week. And joining me to help answer all those questions and all the other fun stuff we have cooking here, first off, we've got the rockingest of lobsters, or I guess unless the last emperor is on, then he's the cold water lobster. He is, of course, Mr. Andrew Giovinazzi from OptionPit.com by way of Carmen Line Capital. Carmen with a K, listeners. Mr. Rock Lobster, welcome back to the program, sir.
It is good to be back on the show. I feel like I haven't been on for a while, but I know that is not true. I'm on all the time. So, but I'm happy to be here. And the lobsters are indeed cold right now, I have to say. There's ice forming, and all the little lobsters, they are cold.
Well, I think all the listeners, what they really want, sir, forget the VIX and everything. They want an update on the Giovinazzi ice rink. How is that going?
Actually, it is going well. It is almost full. We get a little rainstorm in the next 2 days, and we will have a full and nice rink. And, of course, I'll post a picture so you can put it out on social media at some point once it's freezing over and nice and idyllic looking.
There you go. We'll look forward to that. And also joining us, holding down the perhaps not appropriately named Fidelity hot seat today. He is the last dad of Krypton, Mr. TREY JARRELL. And I was just thinking about you the other day, Trey, because my little guy came home from school studying chemistry. I guess they do that now in 5th grade, which is kind of interesting. And he chose Krypton as his element of choice. And, of course, it made me think of you, Trey. So there you go. Popping up in my mind in between shows, sir.
What better selection of an element than Krypton? So good on him. But as always, happy to be back. No ice rink building for me here in Jacksonville, thankfully. So no update on that area. But as always, excited to be here.
I think he chose it, though, in all deference to you. So I think he chose it because he thought he could make a cool weapon to kill Superman. But I had to unfortunately disabuse him of that notion. And last but not least, I do believe we are joined by good old Uncle Mike TOSAW, beaming in once again from an undisclosed location, also known as St. Charles Wealth Management. Uncle Mike, are you there, sir, from the bunker?
I am here from the bunker, but I can't talk too loud today because there's gunshots going on. I mean, this is crazy. This is crazy stuff around here.
We got to get you out of that undisclosed location. It'll be safer for all involved as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is the portion of the show where we break down what the heck is trading. And, you know, it's a weird one. It's been a weird one for a while, listeners. You know, we're in this, I guess the trade war is flipped to the positive today because the markets are happy. Most of the major indices firmly in the green, up about 0.5% or pretty close to it. NASDAQ is the laggard, only up about 0.4%. Everything else, actually S&P just ticked over 0.5%. So there you go. Everything is green on the screen except for gold, taking a little bit of a dip today. Even oil taking a lift today. Of course, all that green means VIX cash taking a bit of a break, right around on 14. Looks like a 1460 or so right now. That puts it almost unched from last show, down about 0.15. So effectively unched when you're talking VIX. That's not a heck of a lot of movement. Vol still a little bit frothy, but coming off a little bit from the highs we've seen of late. Of course, all of this joy out there in the marketplace triggered by yet another tweet from the administration. You know, we saw not too long ago, maybe they wanted to push it through the next election cycle and everything else. Now, all of a sudden this week, they love the trade war. They're close to a major deal. At least that's what we're hearing out of the Trump Twitter machine. And so that, of course, bringing joy to the markets, all that kind of overshadowing maybe this on-again, off-again dance that is Brexit over there in the UK. They're having yet another vote over there. So good luck to them out there as they continue to fight their way through this morass that is Brexit. They can't figure it out. The rest of the world can't figure it out. No one really knows what the heck is going on over there. But maybe we'll see some of these results. Maybe this will clarify things. I don't hold out hope. After so many elections over there, I've kind of lost hope that they're going to sort their way through it, but we shall see. Of course, our old friend VVIX also up a bit since our last show, up about over 5 handles, actually, about 5.5. So 103 back in the triple-digit level. That's starting to get a little frothy, a little bit up there, where you may want to start paying attention. If you weren't paying attention before, VVIX sub 100 can't really float your boat. North of 100, start paying attention. Of course, when you get into that, 115, 120 range, definitely stay glued to your trading screens. Same thing to the downside when we get into that 70s. But right now, we're starting to get in that frothy range where it's worth paying attention to. And our old friend VXX continuing to give back some of that erosion off about almost half a handle from our last show, down to about 1660 or so. Let's go back around the horn. Let's start. He hasn't been on in a little bit. Let's start in the active trader hot seat over there. Mr. Last Dad of Krypton, sir, when you're not out there busily studying the periodic table, what are the Fidelity legions? What are they trading up these days, sir?
Yeah, Fidelity customers busy today here as always. Certainly been a interesting week here across the markets too. A lot of news coming out there today. But we jump on the orders by Fidelity customers. Coming in at number one was actually Apple today. I know the Last Emperor spent some time on that the other day. So we'll take a look at number two, which is a name that usually isn't up there. Here on the list all the time, but did have earnings yesterday, which was Lululemon here, and trading right now $220.55, down about $12.64 from that earnings report. Did come through with good earnings numbers. They beat the earnings per share and revenue above analyst expectations, but current quarter forecasts were below those estimates, and as such, we see price coming off of off of the highs. I thought this was a fairly interesting chart going into to earnings. Right, yesterday managed to hit a new high. So it looked like it might be maybe breaking above some of those levels that had been at the last couple of days. But announcement, managed to pull it back the other way. Fidelity customers are still on the buy side here at Lululemon. So we've got about 65% maybe today taking this as an opportunity to buy, with about with the remaining 35% obviously on the sell side. So maybe using this as an opportunity to catch some on a pullback here as well. But really, with Lululemon, I mentioned those all-time highs. Even with the pullback here today, it was inside what the option market was looking at. Option market straddle before earnings for this Friday was about $18. So, the move right now sitting at $12 inside of that. Price breaking below that 20-day moving average, but still holding some of those longer-term and intermediate-term trend indicators like the 50 and 200 days, still well above that from a price standpoint. So it'll be interesting to see if this move, itself, just kind of a quick pullback, if there is some recovery, or if it does, begin to pull down and threaten some of these levels here as well. Over in the option market in Lululemon, so we do see a little bit leaning towards the call side here today. Got about 85,000 calls traded versus 64,000 puts. But a lot of those calls are actually coming from the sell side. We've got about 19,000 sold on the bid versus 13,000 bought on the ask here. So even with those calls up there, maybe slightly towards the bearish sentiment here from the option market. Here in Lulu today, but certainly interesting one to kind of keep an eye off of. And this is a name 90-day average volume about 21,000 with about 150,000 today. So lots of activity there with Lulu. So next one on the list here today, one that's in and out of our top 10 frequently, but popped back in today was AMD, Advanced Micro Devices. They're having a pretty decent day here right now, up just over 4% at 41.10. That's $1.62. So today they actually announced a new graphics card. So certainly the market's looking positively at that with that nice jump here in price here today. The Fidelity customers using this as maybe a little more of an opportunity to sell. We've got about 57% sellers to 43% buyers in AMD here right now. Chart's been very interesting here on AMD. You had, really from about October, early October to mid-November, this nice steady uptrend from about $29 up to $41.08, hitting a year high, but pulled back sharply off of that high. Today's activity, really taking it back near some of those highs that we had, here recently in November. So kind of be curious with this move if it's enough to really maybe break out of some of this resistance from this previous highs and continue, or if we see another reversal, but it's really right at that point from those prior highs. Option market in AMD, fairly interesting today here too. We see leaning maybe a little more towards that bullish sentiment from the option market. Get about 200,000 calls to 105,000 puts. So big skew to the call side here, with a lot of that actually coming on the buy side. 85,000 bought on ask versus 45,000 sold on bid. So you see a little bit of a bullish sentiment here from the option market. And one other one I wanted to bring up today, big company that don't see on the list all too often, but coming through here today was GE, falling just inside our top 10 here. So been an interesting story over the last couple of years for GE. Certainly had some negative years, but recently kind of been trading in this sideways activity. Today, I did get an analyst upgrade from UBS. It actually pushed the price up just under 4% right now, trading at $11.38 here right now. Fidelity customers today coming in on the buy side here with GE, about 57% buys to 43% sells. Option market. I see a really large skew today on the call side, 219,000 calls to 25,000 puts here right now. So 245,000 contracts, was usually trades 131,000. So kind of very interesting activity we saw in GE. But kind of taking a look back at the longer term chart on this, this was kind of an example we used to use. We teach a lot of technical analysis class, kind of our definition of a downtrend from 2016 to 2018, but really a good lesson for risk management too. You see a lot of these big companies that you think are always going to bounce back, just continue to see lower lows and lower lows throughout. But really hit bottom at the end of 2018. Since then, it's just, as I mentioned before, just really stuck in this sideways action here. Was trading for a while in this $8 to $10 range. This last earnings report, right, really pushed it up here. It looked like it might be finally breaking out of this range, but end of November pulled back a little bit from those highs, and at this move today, kind of leaning back towards that recent highs of around 1180 or so. We'll see if it can carry this momentum through or not. Certainly an interesting one to keep an eye out on. Did notice, too, kind of a big technical signal here. One of the old school ones we'll talk about is that golden cross that happened, here near that past high where 50-day moving average crosses above that 200-day moving average. So you had that taking place. We'll see if it pans out. Last time we had that cross, wasn't really a positive sign for GE. Price sort of quickly retreated, but at least as it stands right now, still holding above some of those intermediate and long-term moving averages, but kind of keep an eye on this next resistance point that's coming up. So, from individual stocks, those were a couple that kind of caught my eye that the Fidelity customers were trading here today.
Thanks for that, Mr. Last Dad of Krypton. Let's move on out now to see what's lighting it up in the hinterlands, that quiet portion of the far, far eastern U.S., where they build ice rinks and they look at VIX. And they also apparently they search for options. The options search. We'll have to check that as we're coming into the end of 2019 here, Mr. Rock Lobster, to see if Maine continues to hold the crown there for the options search mecca of the U.S. But as I'm looking for that data, sir, why don't you go ahead and regale us with what is happening? What is lighting up your tape over there in the land of Maine today, sir?
Well, did anybody notice that the market went? I'm going to save TOSAW. I think he might have a reason to sprout his favorite phrase, but we did have quite a markdown in vol there at the open. There's some sort of trade thing, something. So I saw the 13 handle in VIX for a while. Vol came in. There's going to be a trade something. It's always very confusing to exactly what is going to materialize out of the White House. So the algos took it up big this morning. It was a good chance to exit some short vol trades, which I did. Some short-term stuff I had in our vol newsletter. The midterm to longer-term stuff didn't do much, but the short-term stuff, yes. And what we have is, what do we have? We have still a market's it's like there is still a little bit of confusion. So if you want the easiest way to figure out how the market is thinking, you have the term structure in the VIX future. So one thing I'm trying to figure out is, why don't more people subscribe to my newsletter? Because you know what, it takes a while for people to learn how vol moves, and there's lots of good ideas, but ultimately it is a very let's just call it a dark art. And when you look at how the VIX trades, it's a very unique product that way. So. Right now, what you have is you have the futures are in contango, which generally is normal, right? It's a normal thing. That means the front month is cheaper than the back month because volatility is supposed to be worth more in the future than it is right now. If you think about it, you can have an idea what a stock might do in a couple of days, but you really got no idea where it'll be 6 months from now. So volatility in the future tends to be more. The curve should be in contango. What we do have right now, though, is we also have the front end of the curve where the VIX cash is actually above the future. So the market has been signaling all week this what I would call signal where the future is lower than the cash. And remember, the future is what the vol trader is betting with their money. So what they're saying is, we think vol will be lower in the future than it is right now. And they were right. It's been like that all week, kind of leaning a little bit short with the short-term vol trades. It's proved to work out okay. And now we're sitting at a 1444. We saw the mid-13s. And VIX was 12 when we had a trade, when we agreed to the last trade deal, or almost agreed. So I think, if this is the president throwing another monkey wrench in things, vol could be anywhere on Monday. We could see 18, 19, 20, or he decides that, well, this is okay, I'm good with what's going on. We could see the 12s by Tuesday, Wednesday. So there is a lot of variation in where VIX can be. Right now, the signal short term is lower, and the back of the curve is close to what I would be calling normalizing. The Jan futures were much more expensive last week or beginning of this week, and now they're coming down to what I would call about closer to what I would say is like our fair number when vol's around here. So there's still some stress, I think, in the system overall because, anytime VIX cash gets close to where the futures are trading, there's a little bit of stress in the system. I view that as uncertainty where SPX is. I think that's what we have. So there's still the weekend. It's still not over. It's only Thursday. We have Brexit vote as well, but SPX is trading 3160, which I believe is my exit and the entry for Mr. TOSAW.
All right, Mr. Uncle Mike, you have been invoked, sir. If you can dodge the bullets and the frenzy and the mutant attacks and the zombie hordes from your undisclosed location, sir, what is lighting up your tape?
Never before, ever, in the history of the entire stock market, has there ever been a better time to sell than today. New all-time highs. Very exciting. I'm kind of with Andrew from the standpoint that there is some confusion going on in that, okay, maybe the president needed the market to come up a little bit, so the trade war is going better now, or perhaps maybe he needed a pullback to get back in his personal accounts a couple weeks ago or whatever it was when he said the trade war is not going to be till after the election, and maybe another couple days there's going to be good news on the trade war because they're really close right now. But they've been really close and really far away very frequently, and it's been quite the unique market to trade, at least in the 15 years that I've been doing this, to say the least. So, nonetheless, you always want to have it. It's always exciting when you have a new all-time high, and today's one of those days. And that's what's going on right now in the major market. In terms of some individual names, of course, we have XLF. The financials are doing very well. And pretty much everyone with which you would expect to be doing well on good trade news, and I'm making air quotes with my fingers as I'm doing that, is doing pretty well right now. What's going to be interesting to see in the coming weeks is, of course, are we going to have a Santa Claus rally? Or did the Santa Claus rally come early? That's the main thing that a lot of people look for this time of year. Because the flip side to everything, the bear case for a lot of things in the market going into the end of the year is that we could get a lot of tax selling, meaning that people have increases in their holdings and or decreases, and they want to sell some things so that they can create either tax losses or smaller tax gains, depending on what their situation is. So the end of December is always very interesting to watch to see what way the general public goes with things like that. So this, I think, is going to be a fun couple of weeks to end the year, whether we're bullish or bearish. I think it's going to be a lot of things to talk about on the show, just because of the fact that we are in the third year of a presidential cycle, and election season's right around the corner, so it'll be interesting to see where the president positions himself on everything that has going on.
Let's see what's going on out there in the broad markets. Actually a fairly active day. So this trade war, will they, won't they dance, maybe a dash of Brexit and a few other things thrown in there, all contributing to some decent paper actually hitting the tape today. VIX coming into the latter portion here of the trading block, just a tick over 300,000 contracts. So pretty decent. The ADV there is a little north of 400,000. It's just ticked up again, listeners. So back over that 400K level. So VIX closing in on that. Looks like it's going to be a pretty robust day. SPY blowing the doors off its ADV, closing in on 3 million contracts. The ADV, you're a little bit shy of 2.5 So SPY pretty active out there. Same story for the S, closing in on its ADV. The ADV about 1.1 million, a little over 900K on the tape in the S right now. The Qs, same deal. 464 is the ADV. They're at about 440 right now, so they'll be hitting that pretty soon as well. And even the Russell blowing the doors off it. 310 on the tape right now for the IWM, with 286 being their ADV. Let's go out to the most active equity options. Trey kind of hit on a few of them out there. I think you can probably guess what our number one with a bullet is today. Doing more paper than usual, but we'll get there. Little tease. Number 10 out there cost you $1.58 to break into the top 10 today, listeners. That'll get you to Micron. Number 9, good old Baba at $1.74. Number 8, Disney, $1.84. Stock Twits folks tweeting out the Baby Yoda as business person of the year yesterday. I like that. That was funny. Check that out if you haven't seen that. So they replacing Bob Iger, putting in Baby Yoda. Number 7, Roku, $1.85 on the tape. Number 6, Tesla, $2.42. Now we're getting into some decent paper, right around $250,000 there for GE at the number 5 spot. Number 4, Bank of America with $269,000. Number 3, AMD, back up there, as Trey alluded to, $3.16 on the tape there. Number 2, our old friend DHR, second appearance in the top 10. Haven't seen them too often, and seen them twice now on the course of the past week, which is kind of interesting, doing 470,000 contracts. But that's not enough for number 1 today. No siree, listeners. Apple dominate the tape there, 634,000 contracts on the tape right now. Of course, a lot of that being driven by this, can't really call it a sell-off, a little bit of a dip coming in after Credit Suisse has the temerity to come out and say, the iPhone shipments in China are off about 35%. People thought that would hurt the stock. The stock kind of shrugging that one off today. I guess the trade war news kind of lifting all that. It sold off, looks like it got down to about today, 267.80 or so, 267.79. That was about the low. Right now it's a little bit north of 270 right now. So it sold off a couple of handles, but it's already pretty much gotten most of that back already. So whatever blip people saw here for Apple, kind of short term, but it was enough to, and it has been enough to drive a lot of paper out there in Apple land right now. Of course, there are still some earnings on the docket as well. The optionsinsider.com is the place to go for all those earnings move results reports. I had GameStop this week, Dave & Buster's, Vera Bradley, American Eagle, Children's Place, Lululemon. They have the sheer yoga pants. They're never going to live that one down, in my mind at least. They were on Wednesday. Today we have Costco, Oracle, and Broadcom. So still some big names popping off. I'm looking at the mover and shaker reports and the high volume reports and the earnings move results reports, courtesy of our friends over there at Orats. They got it all there for you. TheOptionsInsider.com. Check it out. Meanwhile, it's time for us to check out some crazy paper. It is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by TheOptionsInsider.com. It's time for the Odd Block.
All right, let's get to it. Some of the weird paper. We know what you come here for on the Odd Block. We know what you want. We know what you want, names you want to hear unusual activity in. And we know you're all here for CDEV. Yep, that's right, Centennial Resources Development. This is the nat gas company. Ticker symbol CDEV. That's what brings you in the door. We know, we get it, we understand. Trading today, whopping $3.96, up about 20 cents, or over 5%. So a decent day here for good old CDEV. If you've been listening to TWIFO, you know nat gas has been on kind of the rampage of late, swinging to the upside, swinging to the downside. It's been all over the place, very volatile, and obviously a lot of that playing out here in the CDEV stock. Let's see. Over the course of the past year, it's not exactly been a banner year, shall we say, for CDEV. A year ago, they were trading a wee bit higher than they are right now. I said they're a little bit shy of $4 now. They were nearly $13.87 a year ago. So, how the mighty have fallen. They sold off pretty hard in the Great Nadir, right down to $10. They sold off $4 almost instantaneously last year. Then they kind of rallied again, got up to their 52-week high of right around 14.5. That was back in January of last year. And that was pretty much it for them. They kind of had a long slog, pretty quick slog, actually. They sold off hard in February from about 13 down to about 9. And And they kind of languished in that $9 to $10 range for a while, and they sold off again in June down to about 6.5. And then they kind of continued this long, slow slog to the downside to kind of where they find themselves now, right around the $4, a little bit shy of it. Actually, they got lower than the 52-week low was $2.92. That was back, looks like, about a month ago when nat gas was really taking it on the chin out there. So it's been a rough year for CDEV. Let's see what our Eye of Sauron picked up for them. This, whoa, interesting. Decent size here. Jan 2021, so long term as well. 20,000 of these 2.5 puts going up for 50 cents. These were surprisingly tight for a pretty illiquid name, pretty far out. These were 50 at 55 cents. Someone came in and crushed that bid for 50 cents 20,000 times, so that bid was pretty firm. I went up over there on the ISC. In case you're curious, these were 36% out of the money. There are earnings, obviously, between now and Jan 2021. The most frequent, or most early, I should say, most recent coming in February of next year, late February. So Mr. Rock Lobster, kind of a weird one. We talk about, not just for the size, but for the term. We talk about people drawing lines in the sand using puts all the time. That appears to be what this is. Maybe you have a different take. I'd be curious to hear that. But the term here is kind of, you don't usually see people drawing a line in the sand, if that is indeed what this is, over a year out. That seems to be an interesting use case because obviously there's no free lunch. You're tying up a lot of capital for that purpose that could be used for other things. So people think, oh, you're getting 50 cents. Also, you're getting 50 cents, but that's not a lot. Granted, this is a cheap name, but it's 50 cents for over a year worth of capital tying up. I don't know. First off, do you agree this is someone maybe blasting out a line in the sand here? And then B, if so, what do you think about them tying it up for over a year for 50 cents?
It's feeling very line in the sandy to me. Like I think this screams line in the sand, and I'll give you two reasons. One, on a $2.50 strike, you take 50 cents. That's a 20% return on risk, right? So you're risking $2, 25% return. You're going to make 50 cents. So that's at least that's where I see the risk there. You should only, at least I think if I did my arithmetic right. So they're like, okay, well, we're not making any money next year. That S&P 500 can't keep going up, but I'll just take my 20% or 20 or 25% on capital risk. I'm risking $2, and they're risking 2.5, but they're taking it 50 cents, and we'll see what happens. So. I think, and maybe calling the bottom in natural gas. I mean, we've seen that a couple times. I think we had like that Encana trade about a month and a half ago, 2 months ago. Similar idea where, people are trying to pick up some of these developers, gas developers, hoping things kind of turn around. Or prices start to go up, or we export a little more. Who the heck knows? There's many, many reasons for all of this. And I think that's kind of that's what I see with that one. So I'm feeling line in the sand, and I don't think the yield is that bad, to be honest.
Uh-oh. You liking it. You want to tie up some capital for over a year out here in CDEV. I can see Mr. Rock Lobster firing up the trading platform as we speak, as we move on out. Let's see what else we've got. You love these hot names. So we got them for you. We got them for you here. The Eye of Sauron goes where it will. We don't direct it. We just allow it to flow and then bring the flow back to us. Now we're going out even though if $4 was too rich for your blood, then don't worry. We've got you covered with our next name. This is MLCO Resorts Call Love. Actually, I'm giving away. Look at me giving away. Giving away the answer. Actually, I take that back. They delivered me the wrong quote. That was a $2 name they're talking about. But this is MLCO Resorts, which is a $22 name, so a little bit richer. So if that was a little bit too cheap for your blood, we got you here. $22.50 exactly. Just ticked up $1.25, nearly 6% for MLCO Resorts. This is obviously a gaming name out there. It looks like they have casinos in Asia. So Asian gaming name. Let's see, 22.5 right now. A year ago, they were about 18.5, so about $4 shy where they are right now. Looks like they topped out in April around 26, almost 27, just a tick under $27 back in April. Then they kind of sold off again to 19 in May. Kind of has been a topsy-turvy chart. Back up to about 25 in July, back down to 21, or 20 actually, in August. They hit their 52-week low actually in the great nadir of last year, right around $16.50. So it was a bad day for MLCO resorts, obviously. Other than now, this past year, they've kind of been vacillating in this mid-20s down to about 20 range, back up and down over the course of the past year. Kind of right in the middle of that right now at about 22.5. So let's see what our Eye of Sauron dug up out here today. Oh, interesting. Call love. It was the Jan 23, so not quite as far out as our previous customer, going all the way out to Jan 2021. This guy content to swing the fences for January. The Jan 23 is going up for 60 cents, so lifting the offer 14,473 times. That's about 4% out of the money. Total of nearly 18,000 going up on the day, so someone liking themselves some Jan 23s. These are pretty much at-the-money calls, slightly out-of-the-money calls here, so interesting strike selection. Someone maybe got a little bit of an axe to grind out here in MLCO land. Worth noting, there are earnings, but not in this cycle. They go off on the 18th of February, so not going to happen here. Mr. Rock Lobster, this seems like a little bit of old-school odd block paper. Someone swinging for some pretty near-term fences. He doesn't need it to move that far. He needs it to move about $1 for this bad boy to pay off in the end, and obviously we know if it gaps up in the near term, they'll be looking pretty good as well. What's your take here on someone getting a little call love here in MLCO resorts?
Interesting trade. It's one of those ones where you're right. They don't need a whole lot of a move. They do need some kind of a move, and it's because it's kind of it's feeling like a kind of a block of stuff. And I have to say is, takeover-y type paper. It's very, it has a lot of flavor like that. I have to admit, I've never heard of MLCO before, but consumer sip kind of, I'm just checking a little bit of a, MLCO Crown. What do they own? Resorts in Asia. Oh, Macau. Hospital. Okay. So Asian, Macau, gaming, stuff like that. Maybe could be a bit of a play on Asia, Hong Kong, something like that. Is that possible? China trade deal coming, all of a sudden they want to buy, stuff like this that's more sensitive. Maybe a little bit more dough, but it is I would say it's a reasonable call buy. And I think to me though, it's feeling very momentum-esque, like looking for a bit of a pop, right? Looking for sort of the highs that we had prior to all the trade sadness. It's somebody's jumping in on the move up. And it could work. It isn't the most unreasonable call purchase we've seen, but MLCO would need to move back to its recent highs for sure.
Mr. Rock Lobster getting his own stock discovery work done here, courtesy of the Eye of Sauron, the gift that keeps on giving. As we move on into our last name here, now we're going back to the cheapies. If you like that about $4, sub $4 range, got you covered. One more here. This is Acorn Pharmaceuticals, Acorn Inc., ticker symbol AKRX. It's a good one for Acorn Pharmaceuticals. Trading $3.70 today, up about 6 cents, nearly 2%. Let's see. Obviously, this is a pharma name out here, so you expect the chart to be a little topsy-turvy. That's pretty much what it was. A year ago, they were trading about 60 cents north, about 4.33. Then they sold off down to, over the course of the past year, they had a little bit of a bump up and down, but they sold off over the course of about almost half a year or so in May down to about $1 lower, about 271 from where they are right now. That was the low, actually was 234. That would come back later. And then they gapped up again to over $5 in July, and then they sold off right again, just like a typical biotech out here, down to 260 again. So they got cut in half pretty much from July to August. Wow, that was a rough month. And then they kind of vacillated in there for a while. Then by the time October rolled around, they were back up to 5 and change into November. So this thing's kind of been all over the place over the course of the past year, as you'd expect for a cheapy biotech / pharma name. And now they're right in the middle of that range again, right about 371. So let's see what our Eye of Sauron has for us today. It's puts. Looks like it's some put love. All these guys and these cheapy names, I like it. They're not playing around. They're lifting offers. They're hitting bids. No dancing. No middle ground to be found here. They want to get stuff done. In this case, it was the June 2020 3-handle puts, so slightly out of the money puts. Went up for 55 cents, so lifting the offer. They were 40 cents at 55 when it went up. Nearly 7,000 times, 6,902 times going up over there on the Philly. This is about nearly 20% out of the money, so a wee bit out of the money there. There are earnings between now and June, obviously the most recent, nearest one upcoming here in end of February 27th. Mr. Rock Lobster, maybe someone out here looks like maybe they're just tired of the dance. You know, they're tired of this will they, won't they, up again, down again, $5, $3, $5, $3 that you get in the biotech. They say they want to have some stock, but probably maybe want to have a little bit of downside in their back pocket as well. And they're stopping themselves out at a pretty low level, shy of the 2.5 range, which is pretty much right around their 52-week low. So an interesting level. But he's saying $2.5 or so and no farther. That's where I'm out. What do you think here for our friend gobbling up some puts in Acorn?
Do these feel like a put sale? Don't they to you? I mean, I'm sorry, a put purchase.
I was gonna say if he sold them, he has a good broker. I want to get that broker.
Yeah. It's a put purchase. Like, why bother again? Like you're buying, is the biotech going to go to zero? It's already, you're already looking $3 here. A bit of a head scratcher on the amount of money you can make on this put, because this is definitely like a zero for the put, right? I mean, you need the stock to go to zero to make any money. So this is a head scratcher of a put. However, we have seen stranger things make money before, but I question this one a little bit on how much you can make spending this kind of money for the put. You need the stock to really make a move, pretty hard move down. So puts in stock at $3. So I actually have no answer for this. Is just okay. Well, they want to protect their stock from going to $2, and they'll make 50 cents. This is an odd one for me. I have to admit. This like buying puts while the stock is $3. It's like, why bother at that point? I've never quite understood that as a trade, to be honest.
I like it. We have a new category of trade. We always had the lie in the sand puts. Now we have the why bother puts as well. You're right. That level, not exactly blowing my skirt up either. So we're not going to put that in the to be watched. Probably put that in the to be forgotten category as we keep on rolling into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
Got to mention, though, we will put those MLCO calls in the to be watched category. So we'll be coming back to those. Those are jams. We'll see how our friend fares fairly quickly. But now it's time to turn around to you guys, see what you guys have on your brain. Also, to pay off some of the interesting debates and discussions we've been having on the show lately. Most recently, of course, I believe it was with the Rock, not the Rock Lobster, the Meatball last week. Exactly on this program about a week ago, we had a contentious debate on the number one subject on everyone's minds today, which is, of course, Baby Yoda. We debated which one was cuter, Baby Yoda or old school 80s style Gizmo from the Gremlins. So we thought we would, in classic option block fashion, we've been lagging here on the polls, the Twitter polls that you guys love. We'll get more of those out there again. We've been busy doing other things, but we had a good one for you last week. We said, hey, you guys settle it for us, Baby Yoda or Gizmo. And yeah, as I kind of expected, Baby Yoda, the flavor du jour, ran away with it. Nearly 80%, 79% of you choosing Baby Yoda. Only a paltry 21% of you giving love for Gizmo. Should mention we had a strong write-in contingent as well for Baby Groot. So maybe we need to do a three-way face-off next time to put Baby Groot in there, because he clearly has some love out there as well. So all you Baby Groot fans out there, we hear you. We see you out there. You just weren't part of the poll this time. Maybe next time. Oh, and also, Mr. Rock Lobster, I'm afraid I have some bad news for you. I talked about it at the top of the show. I did some number crunching while you were talking earlier, because it is that time of the year to check the trends for 2019. And last year, Maine was a surprise king of the options search data for this year. But Mr. Rock Lobster, I hate to be the bearer of bad news, but Maine has lost their crown. You have been toppled, sir, as the number one search destination. I will say you didn't do too bad, though. You were still number 2. But guess which has trumped you, usurped you in the number 1 spot this year, sir?
Illinois?
That would be a rational guess. And yet the answer is no. New York, these are all rational. I would even accept California with LA and San Fran in there, or maybe Texas with Houston. Yeah, no, none of those. Those are not even in the top 5. None of them. Nope. We're going out to the District of Columbia. D.C. is number 1 for options search. Maine, a paltry number 2. So D.C., they do it by this barometer of what's closest to the highest level. D.C. is number 1 with 100, and then Maine is number 2 with 99. So you were in there, sir. A few more searches, Mr. Rock Lobster, you could have taken the top spot again. So I think I take this as a personal failure of yours, sir.
You know what, though? I still feel like I'm holding Maine up well, considering I'm probably the only option professional in the state. I'm pretty much 100%.
Remember, this is per capita, so that could skew it to smaller markets, listeners. And clearly there's one guy in D.C. doing a lot of option searches. What you need to do, Mr. Rock Lobster, you need to find out who that guy is. You need to go down there. You need to shut him down. And then, bam, you're on top again. What do you think?
I'll give him a talking to.
You could do what you got to do. Talking to, the old mob style, maybe money, whatever it takes to shut that guy down. Because clearly he's doing a lot of searching. And clearly he's the only one in D.C. So you're the only one in Maine. He's the only one in D.C. You're neck and neck. We shall see how this. Number 3 is Oregon, listeners, in case you're wondering. Number 4, Washington State. And then number 5, so Northwest, doing surprisingly well. Number 5, Colorado. So all sorts of weird answers out there for the Google search trend. Again, this is just for the generic search term of options. Didn't add any caveats or anything else to that. All right, next up, we got Erik Norstedt. He's written in before, I believe. That name sounds familiar. He says, "Hi, guys. Great show." Well, thank you. Hello to you, Erik. He goes on to say, so with most big funds creating skew by selling calls and buying puts, could traders not arbitrage the skew by buying calls and selling puts and having a short position in the underlying? Yeah, that's a thing people do try to do. I remember I first really encountered this myself dramatically when I moved out from the SPX out into Intel. And that's when you saw this is back in go-go 90s. Every big fund had to own Intel and Microsoft and a handful of others. So they're buying all the calls, buying all the puts. I wish they were buying all the calls. Buying all the puts, selling all the calls. So yeah, guess what we would try to do ahead of that, Mr. Erik? We would try to get ahead of that. We'd try to not quite front run it, but if there was a bid in the book for calls anywhere, we would probably crush it. And, if there was an offer for some puts in the book, we would probably try to scoop those up ahead of the big funds. Because we knew a paper was coming. We knew how the skew was going to move. So short answer to your question, yes, if you could do it, it would work out in the near term. The problem was the overwhelming preponderance of the paper it made it hard to do that in the long term and be a liquidity provider at the same time. If you want to be a customer, you can try to front run that skew and it should work. That said, these big names, it's not quite the go-go 90s anymore where everyone has to own these names. Apple probably might be a little bit of a difference to that, but their skew nowhere near as aggressive as I see it as the way it used to be in Intel land and some of these other .com days. So maybe that trade is not as lucrative as it once was, perhaps as well. But we did try to get ahead of that. You're not the first person to think of that, and it works until you just can't do it anymore. It's not really viable. At the end of the day, all you're doing is buying puts or buying calls and selling puts. So it's hard to maintain that other position for any length of time. Let's see here. Anybody else have any thoughts on this? Uncle Mike, Mr. Last Ad of Krypton, or Rock Lobster about trying to front run this big skew trade?
Difficult to front run. I have nothing on it.
Yeah, it's a challenging one out here. Let's see if we can squeeze in one more here. Here's an interesting one. I didn't know this was a thing, but apparently maybe it is. This comes from Scott Somer. He listens and tweets in all the time as well. He says, memo to the option bigwigs. There is more, in caps, more volume in the second monthly than the fifth weekly. Give us our strikes. And he went on to add, we want strike price reform. If it is a bandwidth problem, just kill the fifth weekly cycle and transfer the methodology of that cycle to the second monthly. So it sounds like he's not a fan of more weeklies. He wants there instead to be more, Well, he says there's more volume in the monthlies. So I'm not sure what I guess he wants to just get rid of the fifth weekly, so that stops gumming up the works for the monthlies. Is that what he wants strike price reform? And he's, that's not a strike. That's a month thing. That's a different thing. I don't know, Mr. Last Data Krypton. What do you think about this notion of getting rid of the fifth weekly so we can devote more of our time and resources to where he thinks it should be, which is in the second monthly contracts?
Yeah, I think what he's getting at is just having the additional strike selections on that second month that you'll see with the weeklies. Some of those, more narrow differences between strikes, but I'd say maybe not a reason to get rid of the fifth weekly, but certainly when we're talking about adding more strikes out there, the more the merrier. I mean, we've seen how quickly things can progress, how many more expirations and strikes we seem to get every year. So all for adding more, giving everyone more flexibility here when it comes to those additional strikes.
We got a few of these types of questions. We get a lot of this, as you might imagine. We'll wrap it up on this one with you, Mr. Last Data Krypton, because it's up your alley. Comes from, I don't know, Tel8HJE. Say that 5 times fast. Wants to know, why aren't there free commissions on options? Just 65 cents for every contract. We know Fidelity, a lot of other major brokers have gone zero commissions for stocks and ETFs. A lot of your Delta One type products out there were, shall we say, a little bit more straightforward to execute. But not on options. Most of them have settled in around 65 cents a contract, including Fidelity. Mr. Last Data Krypton, I know you're not the guy setting the price out there, but I'm sure you've gotten a lot of calls like this on the active trader strategy desk. What do you say to people when they call up, or for our listener here who wants to know why options aren't included in that free commissions palooza, sir?
Yeah, I'd say, at least at Fidelity, it's certainly been great, for the retail client over the years. Commissions, constantly dropping, getting lower and lower. So, definitely the cheapest time ever to trade. I just say at Fidelity, right, if you're an option trader, this is, really one of the only fees that you still encounter. You have access to, our trading platform with no charge. You have access to the likes of me and Mr. Songer and Mr. Vrandopolo that you can speak to, join our classes. All of these things that are included here that you don't pay any additional fees here for. So at least as of now, that's one of the few remaining fees. But just kind of gives us an opportunity to maybe provide a lot of other benefits to you here as customers.
And the Around the Block is one of our few remaining segments, so let's get to it.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, we got a lot cooking in the market. We got trades, we've got Brexits, we've got some numbers, still got some earnings, like I mentioned here. So if you like micro, that's a place to look. Let's start with Mr. Uncle Mike. Uncle Mike, sir, what is on your radar for the rest of the week into the weekend?
Well, watching to see if the trade war, I feel like I say that every day on this show, watching to see if we actually are at a better point than we were before, or this is just more continued manipulation one way or another, just trying to juice the market up or pull it back. So definitely watching that, watching our new all-time highs that we're at right now, seeing if we can continue with this. All-time highs can be both scary and fun at the same time, in that when you get them, you don't necessarily know how much higher the market's going to go, but they're there, and oftentimes the good levels of support are around where the old all-time highs were.
There you go, sir. And Mr. Rock Lobster, same question for you. What is on your radar for the rest of the week into the weekend?
Well, I guess we have a Brexit vote. We're supposed to know what's going on tomorrow. If they can get that thing finished. Remember years ago, what was it, 3 years ago? They were still working on it. And yeah, I just it's all the falls about the trade deal. Congress has been very active, but it doesn't seem to have moved the needle very much from a market point of view. So I think it's okay. We have a deal on the 15th. We had, I believe, we had a taste of what could happen if there is a trade deal or something, or a pushback or a can kicking or something. So we'll see. But I think that's really, it's not even waiting for this week. It's waiting to see how things settle really Monday, Tuesday, Wednesday. So There you go.
And Mr. Last Data Krypton, same question for you, sir. What is on your radar over there at Fidelity for the rest of the week?
It's been an interesting week. I mean, we had a Fed announcement yesterday, and all of our eyes are on the China deal. So just speaks how interesting, how big that news is. So certainly paying attention to that first and foremost. Also keeping an eye on a couple of earnings reports here today. We've got Costco after hours. A stock that had a big run, but it's really had some trouble last few times getting above this 307 level here. Looks to be a resistance level. Option market looking at about a $10 expected move. Which from the current price, if that move is up, puts us right near that resistance. So be interesting to watch from a technical standpoint. Also, Oracle after hours here today. We'll see how that one fares. A little bit not expecting quite as big of the move here from the option market with that one, but been an interesting chart here, bounced off that 200-day moving averages support just a few days ago. We'll see if it can carry some of that momentum and break out of this resistance been running to about this 57 point. So keep an eye on those two names today, but most importantly, just what's happening with the China deal. If we get any additional news, certainly that seems to be carrying things at least today.
That does indeed. And unfortunately, that music seems to be carrying us off. We do have to go listen. So don't worry if you need more. We'll be back in exactly half an hour. Our old buddy, Mr. Erik Norstedt, one of the heads of research over there, senior economist over there at CME Group. Got some great stuff, including a paper a lot of you found perplexing. I'm with you. It was kind of interesting looking at how call skew and option skew in general in the metals is maybe not sending the signals that you think. Actually counterintuitive. A high call skew bid leads to sell-offs in the metals. And kind of interesting, very counterintuitive stuff. We're going to get into that and a lot more fun stuff coming up in exactly half an hour on TWIFO. Stay tuned for that. But before we go, let's go back around the horn, see what everyone has cooking that may interest you. Let's start in the land of the rock lobster. Mr. Rock Lobster, sir, what is cooking in the land of the pit?
Ooh, I like that TWIFO topic. That sounds cool. Anyway, Mark, we got a webinar next week. Look for some end-of-year deals for Option Pit Learning. Look for a slightly revamped vol letter. We're going to put it out also in a way where it's going to help you just like a long or a short signal, depending when there's a really great signal for us. So those things are coming. Trying to make options easier. Come to optionpit.com and we will help you.
There you go. Let them make options easier for you. And I agree. That TWIFO topic is pretty cool. Check it out soon or after the fact or after this show. And check out Option Pit at optionpit.com. Mr. Uncle Mike, sir, if folks want to reach out to you, maybe not now because you're in the undisclosed location, but when you return, where should they go? What should they do?
stcharleswealth.com. I'm a financial advisor who likes to help people with their finances, of course, and their retirement planning and financial needs in general. But what's unique about me is that I kind of like the option product. And not saying options are for everybody, but a lot of my clients, they are. And I'm not afraid to use them for hedging as well as maybe trying to get a little bit more income involved.
There you go. stcharleswealth.com is the place to go to learn more about Uncle Mike. And I will say it. Options are for everybody. They should be. You always have these disclaimers. They're risk additive, all these. No, they're risk mitigating if they're done well. Anyone can use options well. If you trade a stock, you can trade an option. So they are. I'm going to put it out there. They are for everybody. I'm going to push back against that. That's going to be our 2020 plan here. Push back against the myths. And last but not least, Mr. Last Data Krypton, sir. Folks want to kick the tires from an options perspective over there in Fidelity land. Where should they go? What should they do?
Yeah, head over to fidelity.com/options. Learn a little bit more about our overall offering, trading platform, as well as some of the online classrooms that myself, the Last Emperor, offer here for you. But as if you're a Fidelity customer too, feel free to give us a call, 877-907-4429. We'd love to discuss your strategy with you.
There you go. So if you want to get a little more of the Last Data Krypton, or perhaps the Last Emperor, or perhaps the Song of Ice and Fire, or any other crew they got cooking over there in Fidelity land, fidelity.com/options is the place to go. On behalf of the Last Data Krypton and the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you for downloading, streaming, subscribing, for sending in all those questions. I think we should do an all questions episode one of these days. You guys have so many. We'll get to those even more on upcoming shows. And, of course, if you want more, we'll be back in exactly half an hour. Hit next on your listening platform for the next show there, which will be TWIFO. Get into all that hot metals skew debate and a lot more. Otherwise, we'll see you back here tomorrow for Volatility Views, 1 p.m. Central, and then right back again on Monday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.